as we're moving forward in the 15-minute time frame. Really the same technique would be what I would look to do from the 1 hour C to D is where I would begin my Fibonacci analysis. But since we're in a 15-minute time frame, right, now what I want to show you here is I've drawn some lines, I've done all sorts of cool stuff here, but ultimately what you have to realize is that on the 15-minute time frame, I'm going to delete all these lines for a moment because I'm going to focus in on the dead zone scalping methodology. So what's the difference between the active zone and the dead zone, first of all? Well, the active zone, everybody, is from the hours of 2 a.m. to 12 p.m. noon. That's the active zone. That's where the majority, okay, of Forex transactions occur. So usually the markets move in, I don't want to say exactly a straight line, but they move pretty much quite heavily, and daily trading ranges are pretty much fulfilled or almost fulfilled. And that's another question and yes, Eastern Standard Time. Yes, Eastern Time, Paul. Eastern Time, Terrence. So that also brings up the question, well, Jose, the currencies have a daily trading range every day. So if that daily trading range is fulfilled throughout the European session in the active zone, then why would you want to trade the dead zone, right? Well, because on a daily candle, right, every day at 5 p.m., a new day begins. So literally at 5 p.m., which is in the dead zone, a new daily trading range for that new day is in effect. Does that make sense, everybody? The previous day's daily trading range has already been over. The new day has begun. So that's why it's so important to realize that. A lot of people didn't know that. But then we also have here, next to the active zone, we have the dead zone. And the dead zone here, as you can see, is between the hours of 12 p.m. noon and 2 a.m. Okay? So we have the active zone where the majority of Forex transactions occur, and then we have also the dead zone, which is where not the majority of transactions occur. So traders have always focused in on saying, well, I want to trade in the active zone because that's where a lot of pips are capitalized on, and so we've always catered towards those traders. But the reality is that those hours, Eastern Time, are very difficult to stay up and trade if you have a full-time job, even a part-time job, a family. So unless you have an automated system or something you can focus in on, it's very difficult to do that for those that work 9 to 5 and want to get off and trade and do things like this. So the dead zone strategy, the one that I'll show you now, is going to be very simple. Okay? Very simple because it literally helps you understand how to place stop losses with equity management. Okay? And stop losses greater than 50 pips, you'd pass on the trade. And in this market, the great thing about it as well is that what you're looking at is one trade per day per currency. So you don't have to worry about, oh, how many trades am I going to be in and out of? Literally one trade per day. So let me show you how this works. Or let me show you what this looks like here. And again, this will be here, as you can see, as one of your systems, one of your custom indicators here as a dead zone scalping strategy. And when you apply it to the 15-minute time frame, what you're going to realize here is you're going to see a couple cool things on your chart immediately. How many people see the gray and the white bars on your screen? Type in a yes if you see the gray and white bars. Okay. Just so you know, okay, what you're seeing here is the following. You're seeing the markets in the dead zone as the white bars, and the active zone with the gray bars. So automatically, when you open up your charts, you're getting each zone separated so you can visually see it moving forward. Everything that's not gray is the dead zone. Type in a Y or a yes if that makes sense. Everything that is in gray is the active zone. So what you realize from the active zone is that the active zone has a little bit more crazy spikes of movement that take place. Very volatile, right? And the dead zone, not very volatile. But the active zone, there's going to be strategies to take action with. The dead zone, is going to be more of set it and forget it and place your trades. Okay? And right now, we're in the active zone right now. And that active zone will be over around 12 noon. So how do we take advantage of this market, and how do we trade this dead zone, right? And so, well, the fractals, Dorothy, these red dots and green dots, everybody, are fractals. What they do is they highlight the highs and lows the market gives us. What that's there for is to give us strategic stops for the entries that we're going to be taking, okay? So, for example, if we're taking a look at what type of opportunity here we're looking at, you're literally going to be trading after the active zone is over. You're going to realize where is the dead zone and what direction did this market open up in the dead zone. So, for example, if this is the active zone right here, which it is, you're not focusing on trading it. Now, again, Tad's going to show you all this information in class as far as how to trade the active zone if you want, but the dead zone, you literally have to know nothing about the market to do this. Here's how this is going to work. The blue candles, right, they represent here buying opportunities, and the yellow candles represent selling opportunities. Okay, so blue for buy, yellow for sell. Type in a Y or a yes if that makes sense as far as the candles and what they mean, instead of red and green candles that you're probably normally used to, right? So in the situation at hand that we're looking for is, why is this going to be a strategy to help us take advantage of the dead zone, and why is it going to be so beneficial? Because in the summer months, which is literally going to be coming up here, okay, April, which is next month, is going to be one of the last trending months of the 8-month cycle. September is when it began. In September, the trending months began. September, October, November, December, January, February. We're in March right now. We're about to be in April. That'll be the last solid trending month of the year. Then we enter into May, June, July, August, the summer months. The summer months are when the markets begin to get tighten up, consolidate. The ranges are smaller, and scalpers come out of hibernation and begin dominating the market. I mean, slaying the market with pips because they know of the scenario. So one of the strategies I'll show you here is very simple, which will be, once the dead zone begins at 12 p.m. Eastern Time, what we're going to be looking for is to trade the first same colored candlestick after the opposite candlestick has occurred in that direction. What does that mean? Well, that means that we get a color at 12 noon, right? What's the color right here at 12 noon? What color is the candle? Blue, right? So we got confirmation that blue equals buy. Do we just get it on the trade? No. Strategy number one, there's 3 more different strategies you're going to learn in class. I'm going to show you this simple one right here. That's literally, you have to know nothing about the market to trade it. The candle at 12 noon is blue, which is a buy candle. But we don't buy that because we want confirmation of that. So we need to wait for another blue candle to appear after the yellow has already commenced. So what does that mean? That means that now we wait. The blue means buy, so we're going to wait. So, okay, blue color. Step 1, blue candle means buy. Okay. Step 2 is going to be enter the market after yellow candles and another blue candle confirms original buy entry. 2-step process. So the blue candle right there told us, number 1, we're going to be looking to buy this market. So we need to pay attention. We don't just buy it, we leave it alone, and then we wait for the market to give us a yellow candle. There's the yellow candle right there. That's basically telling us, okay, now that the market was blue to give us a buy signal, the yellow is now in play, meaning we need to get ready to buy if we get a blue candle, which means to confirm the trade. So yellow, yellow, yellow. There's the blue candle as our entry. So what we've done is we confirmed the bullish direction of the dead zone with the secondary entry of the dead zone. If that makes sense, type in a yes. We get a candle that dictates the direction. We avoid the pullback or the opposite color, and then we confirm the entry of that movement right there. Okay? Now we got alarms and alerts that'll help you, but now this is the simplicity of this strategy because you're not risking an arm and a leg. If your stop loss is over 50 pips, then you don't take on a trade. But here's how this is going to work. Now, you buy the market at the closing of that candlestick formation. Then, your stop loss for protection, okay, in this particular scenario, if you're buying the market, goes 10 pips below the low of that fractal, okay? So, where's that fractal low? Well, the low is at 1.7701, so it would be 1.7691. 10 pips below. And then your reward would be 1-to-1 or 1-to-2 risk versus reward. So here, this would be a risk of, what, 29.30 pips? So you're going after 29.30 pips here, 1.7748. One-to-one risk versus reward, 1-to-2 risk versus reward could be double that. And you can also, this is strategy number 1, and you set it and forget it. Having a Y or a yes, if that's easy to understand, easy to execute, that's the trade for the day on that currency, no matter what, that's it. Done. The strategy 2 that he's going to incorporate is also with the stochastic RSI to help you take advantage of an opportunity as well. But once you, and it doesn't matter, just so you know, it doesn't matter if after this first blue candle to get back in on the market, if the next one is yellow or the next 3 is yellow. Now, this just confirmed your entry, and now you just set it and forget it and stay in with your stop and limit. You don't get out when there's a yellow. You don't stay in because it's blue. You just simply put stay in on the trade until your stop or limit is hit. Type in a Y or a yes if that takes the whole equation of guessing out and keeps things easy to understand. It works for all currency pairs. You get your color, you wait, you confirm, right? This keeps things easy to understand, easy to execute, easy to obey. And when the markets fulfill these market movements, it's just a simple scalp, and you're done trading. Like literally done trading. You don't get out when the colors are yellow. You've confirmed your entry. You've got your 1-to-1 risk versus reward, 1-to-2 with stochastics involved that he'll show you, and just simply put, get involved and do that. And as you can see, look, that's the scalp for the dead zone. What this is going to be doing here, folks, is the following. This is going to help people that ordinarily don't want to place an up AB boundary trade, a down AB boundary trade. They don't want to trade a consolidation. They don't want to trade a big candlestick formation. They don't want to worry about too much market analysis or fundamentals, and they want to focus in on a slower type of moving market that provides a little bit steadier, right? Easier to manage, easier to handle risk versus reward, plenty of time to make decisions, to lock in profit, plenty of times to get out of the market, and simple formulas that'll literally get you in and out within 1 to 2 hours, and averages about 260 pips per month per currency pair. Now again, it's scalping, so it's not going to be 1,000 pips a month per currency. It's 260 pips per month per currency is the back-tested results that we're looking for here. And overall, what you're looking for here is very simple. You're looking to take advantage of this market and take action on trades that work. Okay? And so in situations like this, now that you're in the active zone, you're done. You know, you're not worried about being in the active zone anymore. I mean, you're not worried about trading the dead zone anymore because you're out of that trade. If you have not fulfilled your target, by the start of the active zone, Tad will fill you in on whether you lock in profit, whether you get out of the trade, whether you let it run still, okay? But ultimately, this was a nice 30-pip move, easy to understand, easy to execute, easy to obey. As a scalper, it's a scalper's dream because it gives you your entry, it gives you your stop, it gives you your limit, and it is now in an arena of a zone of trading that has never really been focused on before, which gives you a whole new opportunity to begin maybe even doubling your profits from things you've been making in the past. And so here is the active zone. Active zone will be over at 12 noon. So today, in what? In 3 hours from right now, less than 3 hours, we'll get our next candle to confirm which direction perhaps it wants to go in, and then we just wait and confirm it again and do the same thing over and over again. Having a Y or a yes if this is a simple formula because it separates the dead zone from the active zone, and it helps you to take advantage of that. Now, Steven says, Jose, does the average or the ATR impact pairs to choose? Not necessarily. Tad says it works for every currency pair. There was no cherry-picked currency pairs because of daily trading ranges or average trading ranges. And what he said was every day at 5 o'clock, a new daily candle opens, so a new daily trading range is established anyways. And so he's going to be talking about all that in the class. But this has an 82% return in 4 months over several currency pairs. And the cool thing about this is that when you join the class, he has workspaces provided already with multiple currency pairs that he's looking at and trading highlighted for you on 15-minute time frames. So this is a great opportunity here to begin diversifying your portfolio, but also making simple techniques a reality for you to take action with that are easy to understand, easy to execute, easy to obey, right? For example, here as well, active zone is in gray, so we don't focus in on the active zones. It's grayed out. It's the dead zone in white. So again, as we zoom in, you can see that the way that this works would be the following here. Once the active zone's over, you wait for 12 noon. At 12 noon, what do we got? A blue candle that represents, okay, the direction may be looking to buy today. So we don't just get in on it. We kind of just sit back, relax a little bit. Okay, there's a yellow candle telling us to start getting ready. And we're going to take on the trade when we get another blue confirmation. There's the blue confirmation right there. So in looking at that blue confirmation, we would enter the market, buying, place our stop loss 10 pips below the fractal low, and then go 1-to-1 risk first reward, or 1-to-2 risk first reward, depending on the equity management that you have and the strategy that you have, and scalp is taken care of. One trade per session. One trade per session. Again, this is the dead zone. So for traders that think the dead zone doesn't move, you can obviously see it moves. But now, and this is the Euro-Australian currency. We didn't even look at that pair today. You can see how that works out. And then when you're in the active zone, you're done, and you wait for the next day in the dead zone to take action with. Having a Y or a yes if this makes things easy to understand, easy to execute, easy to obey. And again, you're not getting out because of the opposite candle. You're setting your stop, your limit, and you're taking action. So again, once the active zone's over, this is the pound Australian currency pair. There's 12 p.m. noon, blue candle to buy. We don't get in on that. We wait for the yellow to pop up. There's the yellow. Right directly following that yellow, we've got a blue entry. Now, a fractal normally forms, right, when there's a low of 2 to the left and 2 to the right. So you would not have seen this fractal low when you got involved in that trade. Does that make sense, everybody? You would have seen that fractal low in the next candle. Having a yes, that makes sense. So when you got in here, because of the confirmation, your stop loss would have actually been 10 pips below this fractal low. So if we had this at what, 1.6180, 1.6170, that would have been where your stop loss would have been. So if you measure the stop loss as far as where it's at, that'd be a risk of 33 pips. So as long as it's not 50 pips or more, you're golden. And risking 33 pips to go after 33 pips, right there would be 1.62374. And then another 33 pips if you're going 1 to 2 would be 1.6274 or 6237. No, 6274, sorry. And you have your entry, your stop, and your limit. And there you can see that's a 1 to 2 risk versus reward that was struck. And so you could have made a nice little healthy profit there for the day. And the stochastic strategy is going to be shown in the class, but this is just a simple scalping strategy to add to your arsenal. It's a two-step trading process. Keep things easy to understand, easy to execute, easy to obey. It's great for all traders, especially U.S. traders who are getting off of work or are not normally accustomed to trading the dead zone because of staying out or not taking advantage of the markets because they're in a big swing and it's not doing anything. This creates an environment of being fun, exciting. It's a short trading duration, and the beautiful thing about this is that it takes the guesswork out of scalping the market. Okay, and so as you can see with your entry, stops, and limits, once you're done, you're done. The active zone there takes over, and now you wait for the next active zone to take place, or you wait for the next dead zone to take place. Active zone's over, you'll wait to take place here. So this is a strategy that, again, like I said, works on every single currency pair on a 15-minute time frame, which takes the guesswork out of the equation and helps you dominate the market like the scalper that you are on the hunt to become. Okay, the scalper that you're on the hunt to become on any currency pair, this works. This keeps things easy to understand, easy to execute, easy to obey. This makes trading fun. This makes trading exciting. This would be one of the scenarios right here, like the pound dollar, where Tad will explain to you what to do in this situation, because the pound dollar, for example, at 12 noon, the pound dollar in the dead zone gave you a blue candle to buy. Okay, so we wait for the yellow to take over to tell us when we're ready, right? Well, there's the yellow, so now we need to get ready to buy if we get another blue candle to confirm that. So yellow, 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 yellow. And then here you can see blue right there. So this would have been, we wouldn't have seen this fractal low. We'd have seen this one. So we would have entered the market here, buying, placed our stop loss 10 pips below the fractal low. And that would have been a risk versus reward here of perhaps 22 pips in risk to go after 22 pips in reward, 1.24075. One to one for the pound dollar. And again, you don't get out because of a yellow candle. You're just simply staying in until the 1 to 1 or 1 to 2 risk versus reward is hit. You have your entry, you have your stop loss, you have your limit. As long as you're now in the dead zone, you're just waiting for this market to fulfill that. But here you can see it went into the active zone here. So Tad's going to teach you and show you whether or not you break even, close out of your trade, or keep it in throughout the active zone, because throughout the active zone it actually would have fulfilled there. So beautiful movement there, as you can see. But the same thing goes for when the market's giving you a sell trade. If you're looking for a sell trade, then at the opening of the dead zone, if the candle is yellow to sell, then you wait for the blue to go the opposite direction, and then wait for the yellow to confirm your sell and get involved the same way, but you place your stop loss 15 pips above the fractal high instead of 10 pips below, buying in this market. Type in a Y or a yes if this makes scalping in the dead zone something that appears now for you to be easy to understand, easy to execute, easy to obey. And the fact that it separates dead zone and active zone, visually it's simple. And it helps you understand that with a very, very simple formula, which is taking advantage of the market, right? So for example, here for the euro-yen, there's a yellow candle at 12 noon. It turned blue, right? And then when it turned yellow to confirm, you place your stop loss 15 pips above the fractal high, and look how the market fell in the dead zone, paying out the 1 to 1, 1 to 2 for the euro-yen. Beautifully there. So what I want to do right now is help you understand that this is going to be an awesome opportunity for you to scalp these markets in the dead zone and diversify your portfolio. And after figuring out how this works, You'll see how in the summer months when you're trading, it's going to be very simple, very easy, and very powerful as well. So the wonderful thing about this is that we've got great news and we've got kind of bad news. It's not necessarily bad news, but the great news is this is Tad Devan. This is a brand new MTI scalping course. He's including the workspaces. He's including the scalping system I just showed you, and it's scalping the dead zone made easy. So what this means is that trading the dead zone for profit is now a reality for you. Strategic stops, no more guesswork where to place your stop loss. At the A, at the 86%, at the lows, no more guesswork. Back-tested, forward-tested results for wealth reliability. That's powerful. And ladies and gentlemen, Tad's a charting expert, so he knows his way around these charts. And when you ask him questions, he'll help you become a subject matter expert as well.